Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Ford announced financial results last week, and really it was a tale of two cities for the company. The traditional business, particularly trucks and SUVs, doing extremely well, but the EV business is burning money like crazy. So I want to dig into the results and see if we can figure out exactly what's going on from an investment standpoint. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you enjoy this video, check out my newsletter, Asymmetric Investing, in the show notes. And I want to start with the highlights from the quarter. This is the overall highlights. You can see $45 billion in revenue for the quarter, $3.8 billion in adjusted EBIT. EBIT is earnings before interest and taxes, so kind of a proxy for the cash flow coming from the business before you have to pay for those two items. And you can see that EBIT is broken down further right here. Ford Blue, which is kind of the traditional car business that you and I might interact with, $2.3 billion in EBIT. Ford Pro, $2.4 billion in EBIT. But Model E, which is the electric vehicle business, negative $1.1 billion, and the EBIT margin was negative 59%. So the traditional legacy auto business doing extremely well, the electric business not doing nearly as well. Year to date, you have a very similar story. Ford Blue, $4.9 billion, a 9.8% margin. That's very, very good. Ford Pro, $3.8 billion in EBIT and a 13% margin. Model E, you can see the numbers are just terrible, negative $1.8 billion. Now, this is a business that they're trying to invest for the future. So I want to keep that in mind, but it's worth noting that the amount of cash that's being burned is really high right now. Now, the two main vehicles that are available right now are shown right here, the Mustang Mach-E and then the Ford F-150 Lightning. Management expects production to be about 600,000 vehicles next year. So that's actually a really high run rate of production. But the challenge that they've had with both of these vehicles is really pricing. Both have had price reductions. Most recently, the F-150 Lightning, which actually came down almost $10,000 in price almost across the board. So it seems that what we're seeing in the electric vehicle market is there's a lot of pricing pressure. That's even impacting Ford, which doesn't seem to have the pricing power that it hoped it was going to have with electric vehicles, and specifically with the Lightning truck. What I think is really notable is the amount of growth that management is expecting. You can see here that in the first half of the year, there was only 46,000 wholesale units sold. Now, volume is up 40% year over year, but remember back to that number that I showed before, 600,000 units expected to be produced in 2024. So that's going to have to be a massive ramp in electric vehicle volume. So it's really this catch-22 for Ford, where losing a ton of money in electric vehicles, but to make money, they're going to have to sell more, but it's not clear that there's the demand for the electric vehicles that Ford is making. The interesting thing for Ford is that you have a very strong core business in internal combustion engine vehicles that is just churning out cash. Management could do things like return that to shareholders, continue to reinvest in the business, but they're investing in this electric vehicle growth opportunity. And right now, it's not really clear that that's going to be all that successful. Saying you're going to build 600,000 electric vehicles sounds great in an investor presentation, but at the end of the day, that means you have to find 600,000 people who want to buy that electric vehicle. With the F-150 Lightning and the Ford Mach-E, it's not clear that demand is ramping up at the same pace that production is. This is the exact same problem that almost every electric vehicle company is having right now. Production is ramping at an extremely rapid pace across the board. Every single company, Tesla, Rivian, Ford, General Motors, everybody is ramping up their production, but is demand going to grow at the same pace? That's what I ultimately question. The nice thing for Ford is that they can afford to lose money in electric vehicles while demand starts to pick up. But in the meantime, the cash burn might be really tremendous. And right now, the run rate of over $1 billion in cash burned each quarter is just not something you want to see as an investor. So something that I'm going to be keeping an eye on closely, but electric vehicles, I think, are going to be much more challenging for all of these automakers over the next year than a lot of people think. Just because revenue is growing in EVs doesn't mean that profits are going to be, and that's exactly what we're seeing at Ford. So what do you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.